Vice Premier Liu He was in Washington, D.C. only 2 weeks ago. Now he's in Washington again. So the two sides are really trying to work towards some kind of memorandum of understanding before the March 1st deadline. The two sides have also enunciated some more positive rhetoric in the last couple of weeks. I believe that in the next several weeks, we'll see some sort of resolution. If not, the March 1st deadline will actually be extended perhaps by 60 days. So at this point, it is quite unlikely for the new tariffs to be elevated to 25%, which is very good for the Chinese economy. So now both sides have said they're keen to reach some kind of resolution. Of course, gaps remain, especially on the structural issues, on subsidies for state-owned enterprises, market access, technology transfers. So in the coming several weeks, we have to stay tuned. But for now, the markets have really taken on a much more positive tone compared to a few months ago.
And indeed, because the language that has coming out has been a lot more positive as well from both sides. One thing I want to pick up on as well, when it comes to a trade deal and China offering to buy more U.S. imports, so whether it's soybeans or other agriculture products, whatever it is, this is also coming at a time where the current account in China is very close to tipping into negative territory. So doesn't that constrain them a little bit in terms of how much they can buy without it being detrimental to their own economy?
That's a very good question. In fact, if you look at China's GDP growth these days, right, net exports are actually not contributing to growth because China's overall trade surplus has been shrinking in the last couple of years. Even though China's bilateral trade surplus with the U.S. is rising, but with the rest of the world, actually China is running a trade deficit. But on the capital account, in terms of FDI, in terms of portfolio inflows, China is still very positive. So you have the current account and the capital account. Overall, you have the balance of payments, which is right now very much balanced compared to many years ago when China was running a big trade surplus. China's stated goal is to have a balance of trade payments rather than running a big surplus. So I think in the next several years, China is going to gradually open up its domestic market for foreign investors, which will attract more foreign capital inflows. And in terms of trade on the current account, China is not going to seek to run a major surplus.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.